Good afternoon. Welcome to the next edition of the SCR Webinar series, How the U.S. Small Business Administration Can Help Your Small Business. With us today we have Gail Newton, Lender Relations Specialist of the SBA, and Keith Black, President and CEO with the Provident Business Financial Services. Thank you for joining us today. Now I'll turn it over to Gail.
Good afternoon, and thank you so much for inviting us to talk about the SBA. The SBA was created in 1953 as a federal government, an independent agency of the federal government, to start, grow, and succeed in your business. And we have three programs that assist us in doing that, and that is counseling and training, access to capital, and government contracting. And we're not going to talk about government contracting today because that's another subject by itself, but this is ensuring that small businesses get their fair share of government contracting. Now, the counseling and training, we have resource partners that assist the small business owners, and this is free of charge. We have the Small Business Development Centers, and we have SCORE. SCORE, they are retired individuals, and they are volunteers. And we have our information that you can contact them. As I mentioned, this is a free service, and they assist with marketing, help you with the business plan, because every business will need a business plan at some point, whether you are looking for funding or whether you are just starting. You need to know where your business is going to go. So they can give you that assistance, and you do have to make an appointment though. And we like to stress to people that this is a service provided by the SBA, so please utilize that service. We do not have free money, unlike what many people have heard. There are no grants. The SBA does not provide grants to start small businesses, and there are no direct loans. We do have a loan program that is done through bank participation. And we have different loan programs that will help you start and grow your business. We have exporting program, and we do have a disaster assistance program to help small business owners recover from disasters. And that is a direct loan. Now, the way the SBA loan program works is three principles. That is the small business owner, the lender, and the SBA. And the guarantee is provided for the lender. And really what it does is reduces the lender's risk in order to help them to assist the small business. What you would have to do once you prepare your business plan and you approach the lender is you sit down with them and ask them about a small business loan. Now, if that loan can be made without the guarantee of the SBA, it will, because not all businesses are eligible for SBA guarantee. Because if you can find funding on your own in other conventional banks, then you don't need the SBA. The SBA guarantee is needed when you cannot find funding on reasonable terms. And so that's where the SBA would come in, and you would approach your lender and ask them about an SBA guaranteed loan. And many people think that once you go to the bank and you've been turned down 2 times or 3 times, then you come to the SBA, but that is a myth. That might have been in years ago when there was direct funding, but we have no direct funds. So you would have to go to the bank, and your negotiation is done between you and the bank. The small business owner is the bank's customer, and the bank is the SBA customer. So you don't have to be turned down and come to SBA. The small business owner, you would never come to SBA to apply for a loan. You go directly to the bank. It's the bank's money. The bank will lend you the money, and the SBA will guarantee a percentage of it. Now, the SBA has 2 primary programs, which is the 7A loan program and the 504 debenture program. And I'm going to talk about the 7A briefly because Mr. Keith Black is going to talk about the 504 program. The 7A program is a very flexible program. The maximum amount is $5 million. It was increased during the Small Business Jobs Act. with the SBA guaranteeing $3,075,750. Now, loans that are up to $150,000, the SBA will guarantee 85% of that. Loans that are over $150,000, then there will be a 75% guarantee. And please keep in mind that this guarantee is for the bank. Now, these proceeds can be used for lots of different things. You can use it for working capital, inventory. You can refinance a business. You can buy an eligible business, construction, renovation. You can buy land. So it's very flexible in the things that you can use it for. Now, the terms of the loan, and remember I said that when you can't find funding on your reasonable terms, then that's where the SBA would come in. So maybe these terms are longer than the banks can go. Working capital will be 7 years, equipment 10 years, and 25 years for fixed assets, something like real estate. So by stretching it out and being able to go just a few years longer can mean great cash flow, your payments could be smaller, so it's a win-win for the small business owner. The interest rates, that is negotiated between the borrower and the lender. However, it is subject to a cap that SBA puts on it. They cannot exceed the prime rate plus 2.75. And they do offer fixed and variable rates, and that is also negotiated between the bank and the small business owner. I need to go back one. Now, not all businesses are eligible for SBA guarantee. First of all, the business must be a for-profit business. The SBA cannot guarantee loans that are nonprofit, that are foreign controlled. If there's a private club that limits the membership other than capacity, individuals that are incarcerated or maybe on parole, individuals who maybe defaulted on a federal loan or a student loan, or have caused some loss to the government, those loans will not be eligible, as well as businesses that are engaging in lending, some type of speculation, passive investments. And we do get a lot of calls that businesses wanting to do real estate and flip houses. Those are not eligible for SBA financing. And we are a federal government that's mandated by Congress, so they tell us that we can't do certain loans. Now, I do want to mention one particular loan is a Patriot Express loan, and this is a loan that is for veterans. Only veterans can apply for this loan, as well as spouses of veterans. They could be a disabled veteran, they can be currently in the military, reservists, or things like that. And this loan goes up to $500,000. They can be an existing business, or they can want to start a business. And the requirements are pretty much the same as the 7A. They can use it for purchasing a building, things like that, machinery and equipment, inventory, working capital, things like that. So this would be for our military community. Now, other sources of funding, we do have our Microloan Program. We don't have one here in the Midlands, but we have 3 around the state. In the Appalachian Development Center is up in the Greenville area, and they only work those particular areas. We have the Charleston Citywide Local Development Corporation that works the Charleston area, and the Small Business Assistance Corporation, which is the Low Country, and they work 3 counties. And the Microloan Program goes up to $50,000. These are by nonprofit organizations, and the loans can be as low as $500. So that has been a good program for a lot of our small business owners. Now, this right here, I want to talk about the 16th of Credit, because this is these things are what the banks are looking for. They're looking for your good character. They're looking to see if you've had any bankruptcies or how you paid your bills. Do you have the management expertise to operate this business? How much experience do you have in that particular field? Do you have some of your own money that you can put into the business? Some people call it skin in the game. Do you have some money that you can put in? Because there are no 100% loan. You have to put some of your own money into the business. The business has to be able to make that payment every month from the cash flow of that business. Collateral, the business need to have some type of collateral or the guarantor that you can put up to secure this loan. And credit is last but not least. Credit is usually one of the first things that they're gonna look at. How is your credit? How have you paid your bills in the past? That is very important because the banks, they're not all inclusive that they all are looking for the same credit score. So different banks may have different criteria somewhat. So one may be requiring a score that's higher or lower. So you need to check with each, the particular bank that you are interested in applying to. But what we like to encourage people to do, if you're either thinking about it or you have a business already and you need a loan, to go to the annualcreditreport.com. Most people know that you can pull your credit report free. So pull it, review it, and just see what's on it because mistakes are made, errors are made, and that way you can see what's on it before you ever approach that bank. And it may be that your score or some things on there derogatory, you have to work on it and bring it up to speed before you can apply. But it's not all over because you do have those negative things on your report. You can always work on that. And even our resource partners can help you with that. So keep those 6 C's in mind as you branch out to apply for a loan, a business loan. Now, I just want to give you some statistics about our loan production for 2011 service year. The SBA guaranteed a total of 380 loans, and this would include the 7A, the 504, and the microloans. Now, this may not seem like a lot, but it is. It totaled $200,285,000 because that is 380 small businesses that were assisted right here in our state, some in our own community. Because there are some 397,000 small businesses right here in South Carolina. So that's a lot of, to me, that's a lot of businesses that received help through the SBA because these are businesses that could not find funding elsewhere. Now, this is the information on how to get help. We have our South Carolina District Office, our contact is here, phone number and the website. And all the information that we're covering here today can be found on our website as well as in the Small Business Resource Guide. We have that online and it is a very valuable tool, and I encourage anybody, particularly those who are thinking about starting a business, to pull that down or call our office and we can mail you one and go over that. We also have some free online courses that you can find at the sba.gov. We have our Small Business Development, which is one of our resource partners, and SCORE. We have their contact as well. So utilize the services, please. And my contact and the other lender relations specialist, Paul Thomas, who is in the Charleston area, we have our contact. So I want you to remember that we have these services through our resource partners. The service is free. We want you to call them, set up an appointment because they counsel by appointment only. Remember that we have no grants, no free money, but we do have our loan program that's done through bank participation. And now we're going to turn the rest of the program over to Keith Black, who is going to talk about the SBA 504 program. Thank you.
Well, thank you, Gail. Appreciate you providing that information for us. And I'd also like to give thanks for the South Carolina Realtors Association for making this opportunity for us to tell everyone basically what is available in our communities. Provident Business Financial Services is your garden variety public nonprofit commercial lender. We're licensed and regulated by the Small Business Administration. And this first slide, which is about the only one that I will even attempt to read, but we basically provide funding solutions for your projects. And that's important. Gail mentioned the number of projects in South Carolina, 380 that were funded in the last fiscal year. That's a big impact because those borrowers would not have been able to get that loan without the SBA participation. Now, some basic SBA 504 criteria, and as Gail mentioned, there are two major programs, the 7A program and the 504 program. The 504 program is primarily geared toward fixed assets of land and building. And in this next example up on the screen, we're just like everybody else out there. We want to swing for the fences. So if we use the example of a building that cost $12.5 million, the way the 504 program works is that we partner with a bank, and at the end of the day, the bank will have half the loan. We'll take up to 40% of the loan, and the borrower gets in for 10% down. That's huge in participation with this project because normally a bank is going to request 25 to 30% down. And if you're talking about a $12 million project, that's a lot of money for a business owner to come out of pocket. So it is an incredible, useful program. Equity injection is, the minimum is 10%. If it is a startup, having been defined as been in business for less than 2 years, it will require an additional 5%. If it's a special purpose facility, it will require an additional 5% on top of that. The equity can be in the form of cash, equipment, or equity in the property that's being financed. The 504 loan structure, as I said, the bank will do 50%, we'll do up to 40%. Our loan is subordinated to the bank. So at that point, the bank gets very happy because now they're at 50% loan to value. We have two flavors of term. One is a 10-year term for predominantly equipment. The other is a 20-year term for predominantly real estate assets. And our rate is fixed. So once again, this is huge for a borrower because we have a 20-year fixed rate term. That mitigates the borrower's interest rate risk, and it also provides a long term in order to minimize the monthly payments that are going to have to be made. I mentioned that the rate is fixed. Nothing's easy when the government gets involved sometimes. The slide that you're seeing right now is basically how our rate is structured. Our 20-year rate is based off the 10-year Treasury note, and even this was done last week. That rate, as of this morning, has already dropped about 26 basis points. The spread to, and obviously the 10-year Treasury note changes on a trade-by-trade basis. The spread to investor, the way the investors look at it, it's not quite a Treasury security, so they demand a little bit of a premium, and that also fluctuates month to month. Well, that gives us the debenture rate. There is an SBA subsidy cost, there's the central servicing fee, and there's also our servicing fee. But the sum of it is you're looking at a rate that's around 5%, and if that loan funded today, that rate would be around 4 3/4%, which is incredibly strong, and that's fixed for 20 years. Loan amounts, let's tackle that. My maximum loan on a garden variety project can be no more than $5 million. And because this is a job creation program, there is a cost per job requirement that's associated with it. And you as the borrower are not held to that standard. I, as a licensed and regulated entity, are responsible and graded for our job creation. There are certain aspects that allow us to have that job creation requirement waived. The predominant ones, if the project is in a rural area, if it is a minority, female, or veteran owned. So give us a call and we can discuss whether those requirements are pertinent to your particular project. Now, if we're doing a manufacturing project, the cost per job is $100,000, then we can go up to $5.5 million. And once again, that's $5.5 million of my loan. So At 40% or even lower, 30% participation, then we're talking about a 15 to 18, $20 million project. And that's a good sized project. Eligibility. Gail touched on some of this on the 504 program. You have to be organized as a for-profit business. You have to be small. And that definition is net tangible assets of less than $15 million and net after-tax income of $5 million averaged over 2 years. Well, that's after-tax income. You're making a lot of money if you bring home $5 million every year. We talked about the economic development objectives. What we can't fund are nonprofits. We also can't fund financial businesses like banks or finance companies. Can't do real estate development. And my all-time favorite is we can't fund businesses that are engaged in illegal activities, so the meth labs are out. Now, what can we fund? We can buy the dirt, we can do the site improvements, professional fees, interim construction interest, obviously build the building, remodel, leasehold improvements, acquisition of machinery and equipment, refinancing of some refinancing associated with the expansion, and for a limited time we can do some refinancing of existing commercial real estate debt. Now, as to touch on the temporary refinancing asset program, and this is for a limited time only. For those loans that have a balloon in which the payment is going to be due, rather than amortizing all the way out, SBA is accepting applications, and that is going to be accepting applications through an entity like Provident Business Financial Services up until September 27th of this year, unless they elect to extend the program. We use the appraised value to determine the structure. It is a modification of the 50-40-10 structure with a regular 504 program, but the borrower does have to have at least 10% equity. The existing loan must have been current for the last 12 months, and by current that means the payment could not have been more than 30 days past due for any month over the last 12 months. The bank cannot shift an expected loss. The original loan must have been eligible for the 504 program. So, and we'll get into that in a minute, but I cannot fund working capital, but I can fund the acquisition of land, building, machinery, and equipment. So, if you have an existing building loan that funded the acquisition of that building, that is a refinance candidate. Once again, the borrower must either employ one job per $65,000 borrowed or meet a public policy goal, of which refinancing a loan is a public policy goal. We can include working capital requests, and we've done a number of those this year. Once again, the loan would be secured by the fixed asset that we're financing. But do remember, this program does expire. We can no longer accept applications after September 27th of this year, and any loans that we do will have to have funded by the end of this year. Other issues, SBA has this 9-month rule for the 504 program. So if you come to me with an application and you have incurred expenses, let's say 5 months ago, all right, I can include those expenses in the 504 application because they were incurred not more than 9 months ago. There is an exception for land. If you had bought your parcel that you were going to build on several years ago, then we could include that in our total project cost to determine the amount of money that we can finance for you. For property, if you had purchased the property, let's say 18 months ago, we would use the actual purchase price as the value for the total project cost to determine the size of your project. If it was purchased more than 2 years ago, we would use an appraisal to determine the value. And In some cases, we've had that value appreciate, so the borrower was actually able to use their equity in the property to increase the amount of down payment that they had to provide. Now, on your typical 504 program, working capital is an ineligible expense. With the temporary refinancing program, it is an eligible expense, but for the regular program, it is ineligible. Now, for the regular program, we cannot fund equipment or furnishings unless it's integral to the business. So if you're a restaurant, we can fund flatware, tables, chairs, cooking equipment, etc., because it's not going to be that large of a piece of the total project cost. And we cannot fund automobiles, trucks, or airplanes, although we can fund boats. Let's talk for a second about credit criteria. We are going to focus primarily on the repayment ability. How well does your business cash flow? And we'll put a lot of emphasis on your historical debt serviceability. The collateral, as I said, we'll be taking a second position lien. The bank will have a first position lien, which once again emphasizes the fact that we're going to really focus on cash flow and your ability to repay. For anyone who has got a 20% or greater ownership interest in either the operating company or the real estate holding company, we'll have to guarantee the loan. Other issues may require life insurance, and that depends on the depth of the organization, the number of partners, etc. Chances are we'll want to have a full phase 1 environmental, and the appraisals, which will be normally ordered by the lender, will be addressed to SBA, Provident Business Financial Services, and the lender. Responsibilities of the CDC, and Provident Business Financial Services is a certified development company. SBA has set up the program so that this is how 504 loans are extended to the borrower. Our responsibilities include ensuring compliance with the 504 program. I will service the loan for the entire length of the loan, and as such, we're the primary contact with the borrower. And with that, that's the end of our presentation this afternoon. If anyone has any questions, please feel free to respond. Just to give you an example of some of the projects that we've funded, we've done a number of hotels, retail establishments. We have a mining extraction company that we financed. We've done an industrial baker. These guys were making over 1 million bagels a day in the northwest part of the country, and opened up a facility on the East Coast in South Carolina. We were part of that financing. We've had various a sign manufacturer, bed and breakfast, accountants, attorneys, insurance. As a matter of fact, we funded a State Farm facility, and that was the second one in the United States that was funded, as SBA had concerns regarding the franchise, but they were able to get over those issues, and South Carolina was the second one that was funded in the entire United States. So we've had a number of different projects that we were able to fund. Now, one of the things that Gail mentioned about bank lending, you have to understand that banks have been under a lot of scrutiny from federal regulators. They're also under scrutiny from their stockholders, and they can't afford to make a 25-year or a 20-year term loan to a borrower, because they're borrowing their money from you and me from CDs and passbook savings accounts. So they have to lend their money short, and they have to make sure that they get their money back. And that is one of the beautiful parts of the SBA 504 program, is that when we participate, the bank is at 50% loan to value. They are reasonably assured that they are going to be able to get their money back in the worst case scenario. So that's the impact of the SBA 504 program nationwide. It's a very useful program. It is helping banks lean out and make lending decisions